So yeah, thank you everyone for staying back. My name is Shivani Salunke. I'm a doctoral student at the Faculty of Law here. Without taking too much of the time, because this is a larger panel and we're going to be a little tight for time, I'll briefly introduce everyone, but I would request you to also elaborate on that introduction by yourself. And then, because we were discussing a while ago, and I think even starting from the question in the morning, which came from Robert, about who should be funding these changes that we're talking about, whether the money should come from the state or it should be private finance. I think that is one question that is top of the mind for a lot of people. And because we have a panel here which comprises a lot of people who are associated with the major asset owners and managers, we would love to have their perspective on where they think their organization is after some decades of financialization. How do they understand the status quo, and what kind of interests do they see as preventing a change in that status quo? So we'll start with Kevin Skerritt, who's with the Ontario Municipal Employees Retirement System, and he has a lot of great scholarship on pension fund capitalism, and he also teaches at...
Thank you, Shivani. Thank you, everybody, and the pair and organizers for inviting me here. So, Shivani, if I understand, we're going to start with just a brief introduction and a brief comment along the lines that you've guided us. So, yes, my name is Kevin Skerritt, and I should say right off the bat, Shivani has identified me, and in the program I'm identified as representing OMERS, Ontario Municipal Employees Retirement System. I want to say right off the bat, OMERS, I do not speak on behalf of OMERS and nor sort of represent them, so I sort of disclaim that, but I do sit on the fiduciary board, the board of directors of the corporation that oversees is the governing board, the central governing board for OMERS, which is a very large asset manager and pension fund based in Ontario, multi-employer, multi-union, very complex. It is jointly governed in a certain sense, and I was appointed to that board by QB, Canadian Union of Public Employees, one of the unions that represents a very large percentage of OMERS members, and OMERS is one of the jointly governed pension plans, and it's one of the large 8, the Maple 8 so-called, in Canada. So that's, I think, why I was, in part, why I was invited to speak. But I also, I will say, maybe in brief introduction, I do bring a bit of a different perspective, I think, from most here, in that I come from QP, I come from the labor movement, and I come into this world of finance with a different perspective. You know, frankly, a very skeptical, critical perspective on the role of finance in our society. And maybe I'll just say like one or two things about that. This is sort of the background to how I ended up here. I was always interested in finance from a political economy perspective. I studied political economy at Carleton 30 years ago. And so when I started working for the union, I became interested in working on the pension side of the various things that we do, in part because our pension plans, which are the vehicle for delivering pension benefits to our members and to workers, also have this other side to them in the liabilities being matched by assets in the financial markets. And I've always been very interested in this. And I'll just say quickly, I came to learn very quickly that QB and other trade unions had emerged in the 1980s and 1990s ambitions to gain more control over our pension plans, in part to secure and improve the benefits that they pay, including in a context of large surpluses that aren't always translated into benefits. But the second ambition, and the one that's relevant for this session, is I think a lot of workers, a lot of trade unions became increasingly aware that financial actors, financial institutions, including our own pension funds, were often being invested and deployed in ways that were actually harmful to the interests of the workers themselves. And so there has long been a desire and an interest to try to, where we can, actually gain some greater voice and control over our pension plans, and ideally over some measure of the investment policy that guides them. And so that kind of produced pressure to transform, where viable, pension plans that were employer-controlled or government-controlled into a different kind of institution governed by some sort of joint governing body. And I'll wrap this first round up by saying the ambition was to gain some measure of control. I would say, sadly, after having worked on it for more than 25 years, that goal has been largely a failure. We have, I would argue, virtually no control over the investment of our pension plans, and I'm sure I'll get a chance to explain a little bit more why and how that is, and how that's relevant for sustainable finance, climate crisis, and our goals as part of this conference.
Thank you, Kevin. We move to Olaf Weber now. Professor Weber is teaching at York University's Schulich School of Business and is also an adjunct professor at the University of Waterloo. He's a senior fellow at the Center for International Governance Innovation, and we're looking forward to hearing his views because, as was referenced earlier in the panels, he's done a lot of qualitative studies around the data that we were talking about, so I think that would make for really insightful inputs today.
Yeah, thank you. So yeah, I've worked in the field since the mid-1990s, and starting with something that was mentioned in the morning, brownfields. So that was the first step that the financial industry went into any kind of environmental sustainability issue. So they had land as collateral, and then if you had a bankruptcy or something, your borrower went bankrupt, you want to sell that. And before that, so in the 1970s, you could just sell a piece of land without whether it was contaminated or not. And this wasn't the case anymore. And so they had to start with assessing environmental issues. So and it's still in a way, and I think that's the main driver why the industry is engaged in the field. It's risk management. So they didn't start analyzing land, whether it was contaminated or not, because they wanted to save the environment, but because it was a business interest. And I think that's something what we see today as well. And it was very well, he's still here, René from National Bank. Why do they do that? They want to manage the risks. The banks, in the meantime, they understand that they are exposed to climate risk and other sustainability risk, and so they want to assess that, and not because they want to save the world. But it's not their business as well. There are others that should do that. And so
Saving the world is not their business.
It's not. I worked in the field a lot, and I experienced as well this kind of, first it starts with risk, then opportunity. So for my research, I started with the credit risk assessment. Then the next one was the opportunities to all the investments. So we were involved in Dow Jones Sustainability Index that was developed some time ago, and some development of the rating systems that were criticized in the morning, so Refinitiv and others, we worked on them, and so helped them to develop criteria. So I'm mainly interested in that field and how banks address sustainability issues, maybe different from many others that are colleagues from me in business schools. I'm more interested in the sustainability impact. So most of the business schools address the problem from the business aspect, of course. So how is business affected? I'm very much interested in how banks and other institutions address the problem, and how can they create a positive impact instead of a negative impact that we often see. So currently I do some research, especially on these financed emissions that was mentioned before, and that's a very interesting thing. I talked to the banks 5 years ago. Can we discuss financed emissions? And they said, we don't have financed emissions. That's not our responsibility. And all the other investors as well, pension funds, you could talk to everybody. And more or less the discussion was done at that point. There was not even an openness to discuss anything. Now that we see regulations in Europe and other parts of the world, that we see stress testing. There were the first academic papers, and I think one was even in Nature or Science or whatever on stress testing, climate risk for financial industries, and Marcani mentioning it as well. So that's the starting point. Again, you know, it's not measured because they want to see, okay, what are our investments or loans, and what are the carbon emissions that are connected to that, and let's reduce that because we want to save the world. It's there might be a carbon price in the future, and then we have stranded assets and all that stuff, and so that might be a risk in the future. So that's an aspect why this topic now is super important in the industry. They're looking for, you know, everybody who works or studies. If you know sustainable finance, you get a job. No worries. So they're looking for people, helping them there, and I think on the one hand, I'm always skeptical are we fast enough and everything. But on the other hand, I must say, in the meantime, there's a movement in the right direction, I think.
Thank you. We move next to Mr. Simon Archer, who is a partner with Goldblatt Partners.
It's on? Yeah. I'm Simon. I'm a labor lawyer. I work for trade unions. Have done pretty much all my life after a misguided stint on Bay Street for 4 or 5 years. But that also means sometimes I know what I'm talking about when I talk about Bay Street things. So, I know things can change because all the bankers you just saw didn't wear a tie, except Professor Young, who's and here the labor lawyer is wearing a tie in the room. So things change, and change is good. Maybe it's good if I describe what we do at our firm and how it relates to climate and ESG. 2 or 3 things. We work with the labor movement, we work for unions, and the labor movement has long been interested in sustainability in what I'll say is a very broadly defined sense. Fair and decent work, redistribution as social policy, and democratic norms, to name 3 important ones. And there's more. Haven't always been good at it, and the labor movement is in something of a decline and a crisis even from time to time. So they had a swing at it. But we work with them, and one of the things that they know a lot about too is just transitions. Started in the 70s because of environmental regulation and change, and they developed, sometimes a little too slowly, ideas about what a just transition to a low-carbon economy looks like. And in particular, using their lenses of expertise, what does redistribution and redistributional impacts look like, and what are policies that can mitigate those impacts? And so, just putting it very bluntly, no matter what future scenario we encounter through climate change and impacts of climate change, there's going to be massive displacement in the economy, migration, and a whole bunch of other things, political turmoil in particular. And the labor movement, as a movement, such as it is and such as it survives, still has really good ideas about what to do about those things. So we can talk about those and unpack them. And I, as a labor lawyer with labor lawyers advising them, can talk about what labor lawyers think about those things if you're at all interested. And I'll just articulate what I think the one big challenge we're facing right now, all of us, and I think the previous panel was actually articulating it really well. And you can tell maybe from my question to them that it was the thing that was bugging me a lot. And that is, how can we create a mindset in our public sector leaders, in our governments, and those at the heads of regulatory agents and others, that can be much more ambitious about policy development, and in particular, finding the money, financing, and leading what needs to be done to transition to a low-carbon economy. Not just set standards for private sector actors to be able to do their work more efficiently and get there anyway. And it sounds, on the strength of the previous panel, that they're already doing what they need to do anyway because they've decided that the European set of regulations are good enough to follow and will eventually catch up. Bear in mind that the people who are up here are probably the most progressive people in the country on this question. And it's the people who aren't in this room who are the problem. And no, I'm being quite serious. We'll talk a bit about that. And I advise some of them sometimes, and I'm happy to be honest about that. But that's the problem that we have here in Canada. And I think it's actually a problem in, well, a lot of industrial democracies or post-industrial democracies. We've learned not to think, for better or for worse, and we can get into this sort of a lifetime of struggling with this question. We've learned not to think that government can and should do these kind of industry-leading things. It used to be called industrial strategy 50 or 100 years ago. And I think there's lots of evidence, we can talk about the reasons why that has to be the case. It isn't just going to be those very good private sector actors we just heard. It isn't going to be the union movement. It isn't going to be the municipal activists we heard from this morning. Hope, what a great name for a municipal activist. There needs to be very well-funded, long-term, strong public sector intervention into pieces of the economy and coordinating actions, absorbing risks. And we heard in the fall economic statement 2 or 3 days ago, I realize I'm going over tunnel style, I'm no lawyer, I get paid by the word, that the government it kind of recognizes that this needs to happen. We need to build houses, we need to invest in Canada with some of the messages we heard in the fall economic statement. So funny, right? So incredibly self-unaware, without saying, and we're going to spend the money to do it. They said, oh, and by the way, pension funds, you should step in, and we're going to make it a little bit easier by reducing some of the barriers, which they already ignore anyway. We're going to reduce the barriers to you doing these things, investing in Canada, investing in green assets, building housing, which is, the big crisis this fall, and it's been around for a while. But it itself couldn't articulate a vision, and we're going to lead. We're going to create this fund, and we're going to build it, and that'll help set a standard for the private sector to follow. In the same way, and I'll just draw a very quick comparison to close, and I'm sorry to continue with that. When we had a New Deal at the beginning of the 20th century, we had water and light electrification in the United States, as you know, and they went and built the energy system, which is really what we have to do again, if you think about it, we have to build a distributed energy system, by public ownership. And that mindset is not present. It's not in the United States, it's not in Canada, despite we could talk about the Inflation Reduction Act and some of the other things that are going on there. They're doing more than we are here. It's almost incredible. That was a very good example to the south that it couldn't be repeated in the fall economic update up here. I think that's the big thing that we have to struggle with, how to change that mindset and how to support that mindset taking place in Ottawa and the provinces and leading the charge rather than saying, we'll just get out of the way by deregulating things. Sorry about going on for too long.
No, thank you. We'll move to Professor Berthemier now. He's Associate Professor of Finance here at the Desdell Faculty of Management. I guess in your response, if you could also combine with the status quo, what you understand to be the major challenges in the industry.
Yeah, thank you, Shivani, and thank you, Per, for inviting me to speak. So I'm here at this hotel, we have 2 buildings, so my office is just a few minutes away. But I'm also, so I do research on capital markets, on household finance, on pension funds. And part of my research on pension funds, I have another role where I'm also the executive director of the International Center for Pension Management, which is a global network of pension funds, the largest pension funds around the world, that meet and discuss best practices and the key challenges that they face. And so in that position, I have the privilege of actually interacting with funds from all around the world and understand how they see climate change. And so I can say a few things, and I'm speaking here not on behalf of the network, and I'm not speaking on behalf of McGill, so classic disclaimer, but I can say a few things. First, there is real change. If you ask the same funds 10 years ago, 12 years ago, how important was climate change as a priority, very few of them would have said yes. Today, that's not true. Today, half of the events that organize or specifically focus on how to have the most effective transition out there. So there is a real change in the mindset and the importance of climate change and how it feeds into the design of the portfolios. 2, when you look at most of the funds, most of them have made a pledge to go net zero by 2015. That's something that you see across the board. Some are more ambitious than others, but it's something that you now see present that, again, you did not see 10 or 20 years ago. I agree with Olaf. A lot of that is not necessarily out of a concern for climate change itself, although, of course, the humans doing it are, but there's a risk component of it, having stranded assets, taking advantage of the opportunities, understanding that the economy itself is changing. What's really interesting when you speak to all of them is there's no agreement on how to do so. So you have a complete range of investment strategies that potentially get you there to net zero. They're quite different from one another. And we've heard them already in the previous panel. And the strategies range for full divestment that we see from some funds to full decarbonizations from within. So some funds take on the divestment strategy, which is one legitimate strategy among others, right? You send a strong signal, you hope to raise the cost of capital for those firms so that it's harder to access capital and then redirect capital to greener ventures. The difficulty though is you need to have a full integration with all the other stakeholders in the system doing the same thing as you, otherwise all you're doing is you're transferring capital to someone else, the ownership, and you lose a seat at the table, right? So that brings to the other strategy, which is more decarbonization from within, where you're going to go to the more polluting firms, sit on the firms, and use your weight as a big capital provider to force the firms to go on that net zero glide path. But that's hard, right? Because as Delia said, in public markets, you might have a tiny stake, so you will be just one among many other investors. So you can go in private markets. In fact, you see that many of the larger funds here are very invested in private markets. 50, 60%. One of the big reasons is they have much greater control. They might own 50%, 60, 100% of the firms at times, so it gives them greater control on how to act more longer term. But it's hard to do that engagement. I mean, you need to bring a whole new team. It's a very different team from the investment practitioners that you have on board. If you have thousands of stocks, which you need to in many ways to have a diversified portfolio, well then you cannot necessarily act at all levels. So where do you focus your efforts? So we see some large funds, for example, who have radically changed their portfolio strategy. Instead of having 1,000 of different stocks, now they might have 30, 40 stocks and a greater stake in each stock so that they can have greater engagement with them. But whenever you think about the decarbonization as such, it's very interesting because if anything, temporarily it might move you against net zero, right? Because you are picking up the more polluting firms so that you can have greater action and force greater change. So that forces us to think about what's the optimal goal of these funds here. Is it to reach net zero, which I can easily do by decarbonizing completely right away? May not necessarily help to decarbonize the world, but I can definitely green my portfolios by getting rid of the heavy polluters. Or do I take a hit temporarily with the hope of making a greater change, and so the delta at the end is what matters, right? And I use my weight as an investor to get that delta to come in, right? But when you look at the different strategies of the different funds, you're going to see very different strategies as a result, right? And we have to understand the mindset behind them, because it actually leads to a very different portfolio from the outside. Now, the greatest challenge that I see, and it has to do with the questions you asked us to think about, is very much on the concept of shareholder value. I don't have an issue per se with the concept of shareholder value maximization. The big thing is, what horizon are we looking at? Long-term shareholder value maximization or short-term shareholder value maximization? And Amir and Delia spoke about that earlier. The big issue is, how do you get firms to be long-term? You can have a firm that maximizes shareholder value for the long term. That firm, I tell you, will internalize everything. They'll want to treat their employees better because they want to make sure their employees stay over the long term. They'll treat the climate better because they don't want to pay that externality and face that increase in carbon pricing and others. So how do you incite these firms to be long term? It's hard in the public markets when you have so many different stakeholders, and it's hard when you have these quarterly reports coming in over and over and you're focused so much on the short term. It's easier in many ways in private markets, because in private markets, if you have complete ownership of a firm, then you can set up a governance structure that incites these types of long-term growth path. But you cannot have too much of your portfolio in private firms, because then you lose all that liquidity, and if anything changes, you lose your capability to react, right? So that really affects that asset allocation between public and the private. So when I think about potential initiatives, really, that can really help us, there's a few of them that I see that can have a real impact. One of them is actions like Climate 100. These are actions that bring all shareholders together, especially in public markets, where they can coordinate and not acting as small investors in the public markets. They can actually coordinate and play a bigger role. The Inflation Reduction Act, in many ways, is despite the crazy name of that act, which is anything about not reducing inflation, but in terms of having a concrete impact on climate change, may actually incite the firms themselves to act much more, because you're providing the conditions, incentives for them to take on those changes. So these, I see here, some concrete actions that can potentially help to solve that coordination problem and help these funds become more long-term and have that ability to steer the firms without the non-stop pressures from the short-term side.
We move now to a voice that I think will be very different from what we've been hearing so far. We have with us Ms. Crystal Papineau, who works with the coalition Sortons la Caisse du Carbone. I'm sorry for my French pronunciation. But that has been a very vocal voice in Quebec in terms of divestment from fossil fuels, and we've been discussing in the previous panel how there is a need to look for alternatives and if there is even a viable path to that. So if you could tell us what the organization has been doing, what kind of challenges have come up, and also because we were moving now towards the more concrete steps that you expect to see in the future, whether it's from the state or from the private sector, if you could elaborate on that as well. Thank you.
Oui, merci. Puis je vais m'adresser à vous en français aujourd'hui. Donc, merci beaucoup pour l'invitation, vraiment. Ça me fait plaisir de pouvoir parler de la coalition Sortons de la caisse du carbone. Peut-être certains d'entre vous la connaissent. Donc, on est une organisation de plusieurs membres de la société civile, dont Greenpeace Québec, le projet de la réalité climatique Canada et SNAP Québec. Et aussi, je représente des citoyens aujourd'hui qui sont sensibles aux investissements de la Caisse de dépôt et placement du Québec. Donc, on exerce une pression qu'on juge constructive sur la Caisse de dépôt et placement du Québec. On en a parlé tantôt, la CDPQ fait de belles choses. Mais on juge que donc elle peut en faire encore plus pour jouer le rôle de leader qu'elle a actuellement dans le milieu financier. Donc, on a cette mission de demander en effet le désinvestissement des énergies fossiles, chose que la CDPQ a réussi à faire au niveau de la production du pétrole. Donc, depuis décembre 2022, elle est sortie de la production du pétrole, mais elle demeure encore très investie dans d'autres secteurs du pétrole, dans le gaz également, dans le charbon minimalement, mais quand même, elle est encore là. Et à ça, nous, notre mission à travers les années, on est là depuis 2016 en fait. On a ajouté aussi les enjeux de biodiversité, de droits humains et de respect des droits des peuples autochtones, puisqu'on juge que c'est tous ces enjeux-là qui forment en fait le monde dans lequel on est actuellement. Il faut s'en occuper. Donc, de façon peut-être plus pratico-pratique, qu'est-ce que ça fait une coalition comme la nôtre? Donc, on est dans les médias, entre autres. Donc, on est aussi des communications privées avec la CDPQ. On fait de la recherche, on sort des rapports aussi chaque année où est-ce qu'on a des recommandations. Donc, quand on regarde de plus près les investissements de la CDPQ dans les secteurs des énergies fossiles, comme cette semaine, juste pour vous dire, par exemple, on a sorti sur la biodiversité. La CDPQ, par exemple, a investi 200 millions de dollars, peut-être le savez-vous, dans l'usine qui va être en Montérégie de l'entreprise Northvolt. Donc, on n'est pas contre cette usine-là, mais encore maintenant, on n'a pas eu de résultats concrets sur les impacts environnementaux, sociaux et économiques de ce projet-là. Il y a beaucoup d'enjeux qui entourent la biodiversité. Donc, on a sorti cette semaine pour demander à la CDPQ, comme investisseur, de demander une étude publique et indépendante sur les impacts de cette usine-là, donc en Montérégie. Donc, on fait des choses comme ça pour essayer de pousser un peu plus loin les actions de la CDPQ. Sinon, un enjeu important, nous, sur lequel on travaille, c'est l'éco-blanchiment. Donc, on travaille avec la science, toujours les rapports du GIEC, rapports de l'ONU, pour nous, c'est des rapports sur lesquels on se réfère souvent, donc parce qu'on est capable de voir quelles recommandations ou pas la CDPQ suit. Au niveau de l'éco-blanchiment, il y a 2 éléments qui nous préoccupent actuellement. Il y en a un au niveau du scope 3, donc la CDPQ ne calcule pas ces scope 3, donc ça ne nous donne pas un portrait réel des gaz à effet de serre qu'elle émet actuellement avec son portefeuille. On connaît les enjeux entourant le scope 3, bien sûr, mais sinon ça demeure une de nos recommandations et de nos revendications depuis quelques années déjà, sinon qu'elle exerce une pression elle-même constructive dans ses investissements, dans les entreprises dans lesquelles elle investit pour que le scope 3 soit calculé, puis elle-même puisse calculer aussi son scope 3. On regarde de près aussi, elle est membre du ICSSB, là, avec qui, en 2024, va l'obliger, si elle demeure dans ce groupe-là, de calculer ses scope 3. Donc, on va voir comment elle va agir à ce niveau-là. Et sinon aussi, on regarde de près la cible en absolu, donc au niveau de CGS, qu'elle n'a pas encore. Donc, elle a une cible d'un objectif en intensité. Donc, c'est aussi une recommandation de l'ONU que les fonds de pension comme la CDPQ se dotent d'une cible en absolu afin de réduire ses GES et d'atteindre sa carboneutralité 2050. Sinon, peut-être juste dire un peu au niveau de l'avenir, on regarde aussi un petit peu plus près, nous, on cherche à avoir un débat constructif sur l'avenir de la CDPQ. au niveau à savoir, est-ce que c'est possible d'avoir une mission de rentabilité et de développement économique dans ce monde dans lequel on est actuellement en pleine crise climatique avec des ressources finies? Je pense que c'est une discussion qu'on n'a pas beaucoup eue aujourd'hui, mais je pense qu'il faut mettre ça dans l'espace public davantage. Et aussi, on croit au niveau du législatif, on a une loi qui encadre la CDPQ actuellement, qui s'appelle la loi sur la Caisse de dépôt et placement du Québec. On demande une modernisation de cette loi-là pour qu'elle reflète les orientations de la CDPQ actuelle, justement, et qu'elle intègre des objectifs sociaux et environnementaux à la mission de la CDPQ. Pour avoir cette idée de double matérialité, donc de plus seulement regarder l'impact des changements climatiques sur les investissements de la CDPQ, mais maintenant on veut aussi une plus grande pression sur quels sont les impacts des investissements sur la CDPQ, sur l'environnement, sur nos collectivités, et avoir une plus grande reddition de compte à ce moment-là, à savoir, bien, qu'est-ce qu'on a comme chiffre, avec quoi on travaille, ça a été quoi ces impacts-là de la CDPQ, et c'est ce qu'on demande au niveau de la loi. Et finalement, je pourrais juste continuer en disant la CDPQ, chaque année, doit voter comme actionnaire. Elle vote beaucoup. L'année passée, il y a un rapport qui est sorti. Elle a voté 67% contre des résolutions sur le climat. Donc, on peut penser qu'elle peut faire mieux dans les prochaines années. Elle a un rôle de leader, un rôle important, comme on l'a dit dans le panel précédent. Et on pense qu'elle doit utiliser davantage ce rôle-là pour exercer une pression constructive, assurément, sur ses actionnaires, finalement. Voilà.
I would just like to move back to Kevin, Olaf, and Simon once to talk about what you see as the most promising points of intervention today.
Thank you. Promising points of intervention. In a sense, that question allows me to provide a comment that I was sort of intending to share anyway, and I think and hope it picks up on, is it Alice? Chris, this point about commitments that are made by these large financial institutions, pension funds, etc., and then the actual practices inside. In OMERS, the pension plan that I am involved in, and I am captured by confidentiality and disclosure obligations, so I have to limit to some extent what I share. But what I want to share, and I think I can share, relates to this. OMERS just recently launched a new climate action plan. It was unveiled a couple of months ago with new targets and goals, and it's very much in line with confirming and going a bit further than 2050 goals. But at the end of the day, I think it's fair to say that the framework and the pace of movement between today and 2050 is very slow and not ambitious enough. Frankly, I don't think it's nearly ambitious enough. And I guess the point I want to make in relation to this, and I think it probably relates to the KES and a lot of the large financial firms, which, as has been pointed out previously, I mean, all of these firms now adopt official statements and language about ESG, about sustainability. They join the coalitions and they're involved both in public processes and behind closed door processes. But I think we need to think critically about, like, what is the role that they are actually playing, not only as investors, but in particular in the policy process. And to sort of make this point, I want to share a paragraph that I think is really powerful and indicative. This picks up on the point Simon made about this conference, this particular network of contributors from the banking sector, the financial sector, and the legal and related sectors. I think this is clearly a very enlightened and visionary crew that Per and organizers have brought together. I don't believe it's reflective of the financial sector or the pension fund sector, which I would suggest is in fact not only a laggard, but in certain circles and political processes, an opponent. It is an adversary. It can work directly and indirectly through think tanks, lobby groups, other actors. It can act in ways that are actually frustrate and undermine our goals, those of us that want to see more ambition. And I want to share this paragraph because I think it reflects something really powerful to me, and I think I'll be interested in the reaction of the room. Maybe I'll just ask for a show of hands. How many people here are familiar with a dramatic statement that was issued 2 years ago in 2021 by a former executive with BlackRock by the name of Tariq Fancy? He was the chief investment officer for, I don't know, for sustainability, I think was the title. How many people are familiar with him or his statement? No, not many hands. Okay, well in that sense, this is not much more relevant. Let me just share, he came out, he quit his job as chief of sustainable investing, and he made, I think, a very powerful statement. He says, this is March 2021, as the former chief investment officer of sustainable investing at BlackRock, the largest asset manager in the world with $8 trillion in assets, I led the charge to incorporate environmental, social, governance factors into our global investments. In fact, our messaging helped mainstream the concept that pursuing social good was also good for the bottom line. Sadly, that's all it is, a hopeful idea. In truth, sustainable investing boils down to little more than marketing hype, PR spin, and disingenuous promises from the investment community. When I left the industry in late 2019, due to family business obligations following the passing of my father-in-law, I was frustrated by the lack of real change. But he says, I took some comfort in believing that if we weren't doing as much as we could, at least we weren't doing any harm. Since my departure, I have had a lot of time to think about this issue, and I've reassessed my opinion. I believe we are doing irreversible harm by stalling and greenwashing, and all in the name of profits. We're running out of time. We need to accept the truth. To fix our system and curb a growing disaster, we need government to fix the rules. So that's his dramatic sort of exit statement after spending years as the leader for BlackRock, largest asset manager in the world, in charge of sustainable investing. I think that's powerful because he's an insider. He's not some left-wing critic from outside. He was actually doing it. And then comes out and kind of wants to do a confession. We can all take from that what we will. What I take from it in part, I mean, that resonates for me because I think BlackRock, other major financial institutions, including, sadly, some of our own pension funds and other financial institutions, are not, in fact, at present, actors that are advancing at the pace and in the direction that we need. And I think there's a number of reasons for it, including, most importantly, and I think it was one of the panelists in the morning session who spoke about it. Like, what's the reality of a financial institution that is not true of government? Somebody framed it as, well, you know, we have to balance our ambitions around climate and ecological concerns and sustainability with the, in fact, primary imperative, which is the rate of return, which in the pension fund space in particular is wrapped by a very powerful legal doctrine of fiduciary duty, as we all know. And I'll close with this. You know, I will reveal this. I raised, as I say, the lack of ambition in our own pension plan, the one that I'm involved in. And as I say, the response from inside, I won't quote anybody directly, but the response from inside is, well, it's true, but you know, at the end of the day, we have a fiduciary duty. And what does that mean for him and other insiders in the leadership of these institutions? At the end of the day, our return objectives have to be primary. And I think that is operationally exactly how things work, which means to me, you know, if I step outside of my role as a fiduciary in the pension plan, the only way to obligate the changes that we need is to do it through public policy, not through moral suasion and, you know, begging and appeals to financial institutions.
You know, there's another great example. I think that's a company in Ontario that was one of the first that developed hydrogen powertrains. Again, where does the train run? There's now one, I think, in Quebec anywhere, but the first train they developed ran again in Germany. And I have to take a diesel train from Toronto to go to Montreal. So why? This can't be. So we need more, what I call it, it's not green finance or green tech finance, it's implementation finance. So we have to figure out how we implement all that stuff and how we use it. It doesn't make sense from an investment perspective, always investing in something that is not used later. You know, I think that's one of the big problems. Then a third is we have to offer real transition strategies. You know, we can discuss about these things, you know, stay in fossil fuels and all, something like that, and engage with them. But I think there's a huge difference. So we can say, there's an issue, for instance, with the steel industry. Okay, there is high energy, but there's a way to transform this industry that they create the same product at the end with zero carbon if they use hydrogen or whatever. That's possible. And the product itself is not having these high emissions at the end. You can't do that in the fossil fuel industry. There is no way to do that. The only thing you can do is to transition them to a different form of energy. And good luck with that, keeping them and engaging with them. You know, if you ask the investors, how do you engage with big oil? Then they say it's private. Because I'm sure there is no change so I haven't seen any. There are only very few companies. And so, well, we have to offer real transition strategies. And for instance, I think today it was in the news, the carbon capture storage thing. Tons of money put in, it doesn't work. The outcome is they produce more oil and say we have a better production process, but that's not the problem. 40% of the emissions in the world is oil and gas use and not the production. That's not the problem. So we have to offer real transition strategies. And what is connected with that is we have to address the needs and the demands of the losers of that transition. We cannot always think everybody is the winner. You know, I was on working groups and then a regional one, and then I said, it's great, we have public transport everywhere, we can take the streetcar, tram, and then the bicycle, we don't need cars anymore. And then I thought, do you think everybody doesn't want to use cars anymore? No, probably not. So we have to address this as well. And we clearly in Canada, the big problem is that that the government has a climate strategy that doesn't mention fossil fuels, interestingly, because we can, but we have to address that problem. We have to figure out what is a strategy that improves the economy in Alberta and improves the promise there. Nobody really wants to work in the old sense. It's not really a fun job. So we have to figure out what can we do there. So how can we address this transition, and how can we create a strategy that addresses the real problem, but in a way that helps really transition that. And maybe as a fourth one, and I think I'm changing over time over the last decades. I think we should create, the best thing is to create incentives for the business world. And I'm not this turbo capitalist, but think about who changed the automobile industry. Well, that was Elon Musk. And I don't like that guy a lot, you know, but because of pure profit making, he changed the industry. And the thing is, we have to put in practice the frameworks that others are also have the opportunity to make money from that. You know, I think we can try and fight all that and try and say, you know, you should do more conscious business, you should do that and that and that. But I think we should would create more incentive. One example is the fossil, the emissions pricing. If there's high emissions, if you have high emissions, you have to pay a lot, then you will reduce the emissions, and there might be other incentives as well. In China, we have the banking regulation, green finance regulation. So banks get better interest rates from the central bank if they do more green. And then they do it. It's creating the incentives instead of, I think, fighting against the business.
The fact that we're having this conversation is new, is nearly unprecedented in my experience in this issue in particular, and the ESG ones, and I'll say the difference in a second about those. The previous panel, astonishing in some respects, and I've spent some time with pension funds and the financial sector regulators. I've sat on their advisory committees for years and so on and so forth, and I haven't heard anything nearly as progressive at those places as I had here this afternoon, so that's got to be good. Can we have more of that? And I think lastly, honestly, I've been practicing 30 years or so, doing what I think is good, honest work. But my young colleagues, so my young lawyers where I work in my firm, are completely articulate about these issues and have a sense of what they want politically to have happen. And for me, that's a sign of hope. And I hate it. It's like, oh, let's just punt it to the young generation, they'll fix it, and I'll just go buy my Escalade now. No, I need to also get in with it. But I think the fact that they're already politicized and they already have a vocabulary and understanding in politics is, for me, very hopeful. So there's my best shot at signs of hope. Or someone assassinates Elon Musk. I shouldn't say that probably. Anyway, so ESG. So a quick, short history of ESG, which I think might help us think about it a bit better. Unions have long been interested in ESG stuff. Before ESG, it was SRI. Before SRI, it was CSR. You guys all know the history of it, and there's wonderful critiques and contextualizations of this. But basically, it's what Kevin said. Unions got interested in mobilizing huge pools of capital, which they had some scant influence or control over, but thought that they could maybe do something with it, and for the longest time got exactly nowhere, probably went backwards. And Kevin and I have been involved with debates with academics in the States in which we go back and forth about whether it's a good or a bad thing to spend time doing or not. But that's sort of the cautionary tale piece about it. Don't put all your eggs in that basket. Those behaviors are good, and we should have more of these, lenses put on decision-making at fiduciary tables and so forth, but don't think that that's the transformative change, and in fact, there's plenty of reason to be skeptical about it, and maybe we can have more. The other thing is, ESG itself, these three letters do not belong together in the same sentence, or even really the same analytical lens, would be my challenge to you. They're the ones we have, but it's just completely bananas to me, and in fact, if you had to pick one, pick E. Climate, it's the existential crisis, that's all you should be focusing on, and I am sorry to say it, but I bleed pink, and the S is nearly undefinable, and if it contributes to the problems with measurement and comparison and standardization that we heard about all morning and this afternoon, then jettison it. Don't worry about that. The S struggle is going to be there in a whole bunch of ways as long as capitalism rolls on. But don't let that stop you from doing something about climate. What we want to say. And the G part, we don't talk about it that much anymore. Professor Yeldon, in the 90s, the G part was the only thing people talked about, governance. Governance meaning integrity in capital markets and trying to diminish the amount of fraud and other bad behaviors that go on them. And institutional investors could do something about that. They could insist on healthy policies, healthy governance policies, and healthy practices in their investee corporations and stuff. And judge for yourselves whether you think there's more fraud on the market or less fraud on the market then and now due to the Canadian Coalition for Good Governance, a bunch of pension funds with all the right ideas and good people at the table and stuff like that. But have they been able to kind of stomp out the kind of securities fraud that we read about every week in the paper and stuff like that? So maybe that's been happening, maybe it hasn't. Don't let it distract you from focusing on what you have to do about climate in particular, E generally, but climate in particular, which is the existential piece of this whole crisis. The other parts are existential in some ways, but in nowhere near the same magnitude and effect on humanity and beyond humanity, right? We're in the quote-unquote post-human era of the planet. So why don't I stop there, actually, just random. I hope that answers your question.
That did. Thank you. So we'll go back to Professor Bertemir and Crystal now. Just one or two very concrete things that you think would make for great points of intervention.
Yeah, I wanted to go back over actually both what Kevin and Olaf were saying on the role of policy and incentives. There is an interesting paper recently by one of the finance professors at Copenhagen Business School making a simple point that if we had a well-functioning carbon pricing market, we wouldn't be here. There's no sustainable finance, there's no need. If you have a functional, complete carbon pricing market, the price is internalized. The firms that need to pollute because it's a necessary good for society, they would pay a greater price for it. Those who don't need it would go somewhere else. We wouldn't be here trying to figure out how to fill up the vacuum, right, and get to net zero as efficiently as we can. The big issue, and Amir mentioned it earlier in the previous panel, the big issue is that pollution is an externality. We simply, in simple form, we do not pay the price that we impose on the planet. So just coming here to this conference, we traveled by train, by plane. Most of us probably did not pay the fair price, the true cost of what we consume. And that applies to all of us. It's not a judgment factor, it's a fact. It applies to myself too. It's something that firms do, that individuals do. If we do not have a well-functioning carbon market, at that point, we're operating in a vacuum where we're wondering, well, who should bear the cost, right? And at that point, it's trying to figure out how we can all act, but it becomes very hard because, again, we face that big coordination challenge where it goes back to every one of us thinking that our impact is not as important because we're small, right? But when you accumulate all that, it actually adds up. And so, just want to make that simple point, that back to policy, if we had such a market, which is very hard to establish, because again, from a policy perspective, you need to get the whole country on board. But if we did, we wouldn't be here.
En fait, j'avais en tête, pendant qu'on parlait, en fait, des politiques publiques, de les lois, la législation et tout ça, mais ça m'a fait penser aussi, en étant dans ce milieu-là depuis quelques années, donc il ne faut pas oublier que les fonds de pension, la Caisse de dépôt et placement du Québec, par exemple, a des cotisants, donc c'est travailleurs et travailleuses, il y en a des millions au Québec actuellement qui cotisent à la Caisse de dépôt. Et donc, ces cotisants-là se réfèrent en fait aux déposants. Donc, il y a environ 48 déposants, si je ne me trompe pas, à la CDPQ. Donc, ces déposants-là, chacun gère en fait l'argent de ces cotisants-là. Pas gère, mais vont donner les orientations à la CDPQ pour savoir où sera investi cet argent-là. Et en travaillant dans ce milieu-là, et là, j'ai vraiment un chapeau d'ONG, là, mais on se rend compte qu'il y a un grand manque de connaissances, d'éducation financière au niveau de ces cotisants-là, au niveau des citoyens, au niveau de... c'est un langage qui est difficile à comprendre, la finance, et pourtant, c'est des milliards de dollars qui sont investis dans des entreprises qui viennent de l'argent des retraites des Québécois et des Québécoises. Et très peu d'entre eux savent réellement ce qui arrive avec leur argent, en fait. Donc, pour moi, actuellement, s'il y avait aussi une voie à suivre, et là, encore une fois, j'ai le chapeau d'ONG, mais je crois qu'au niveau même des syndicats, il devrait avoir une plus grande partie dédiée à de l'information, à de l'éducation, à savoir qu'est-ce qu'on fait avec cet argent-là, où est-ce qu'on veut que ça aille finalement. Et pour avoir discuté avec plusieurs syndicats, de plus en plus on se mobilise. Par exemple, le Front commun, qui sont présentement en grève, qui représente 420 000 travailleurs et travailleuses, ont voté pour une résolution demandant une politique plus audacieuse au niveau des investissements de la CDPQ. Mais une fois que c'est voté, qu'est-ce qu'on fait avec ça? Qui l'apporte? Donc, il y a toute aussi cette mobilisation-là qui est hyper importante une fois que la résolution est votée, qui l'apporte au sein des syndicats, au sein des cotisants et des déposants pour arriver à mettre une pression supplémentaire au niveau de la CDPQ. Donc oui, on a cette perspective plus macro, mais au niveau de la base aussi, il y a un grand travail à faire pour mobiliser les gens justement pour amener des investissements ou une orientation un peu plus d'avoir une économie plus durable aussi, qui doit partir de la base vers le haut également. Et voilà, moi je crois beaucoup à ça, mais c'est pour ça que je fais ce travail-là finalement.
Thank you. So we'll stop now for and take questions from the audience.
Thank you. So that was a very, very interesting conversation. Thanks for that. The tone is dark for good reason, but let's talk about solutions. I loved honesty from Momers. I loved your point, Sebastian. We talked for a long time about pension funds. Now let's talk about what can we do and who should do it. So yes, the policy point, let's forget about it. It's not going to happen, but it is on the government to act. But just like the pension fund, it doesn't act if it's not being told to act. So two things there, and I want to run it by you to see if it resonates. What do you think about those solutions? One, you talked about, Kevin, you talked about pension funds and corporates not acting, being all, greenwashing, basically. Corporations, just like pension funds, are made to, do shareholder returns or beneficiary returns. It's not true that corporates or pension funds are one entity. We talk about them as if they had one soul, but they're just a society in small. You have the tree huggers and you have the mercenaries and everything in between inside. Is there a world where maybe it's incumbent upon us to work with those insiders who are insurgents and who want to make a difference inside the CDPQs of this world, the OMERs of this world, or whoever else? On my end, I don't believe that there is such a thing as OMERs. Yes, it responds to one CEO, but there's different voices inside. Can you work with the insiders and make a difference there? Is that a way forward? The second one, just very differently in terms of solutions. There is a way to speak to the people who are, let's say, quote unquote mercenaries, maybe that's not the right word, who care about the bottom line. There is a way to translate the climate reality into risks to your portfolio long term. Half of the assets are stranded assets in the oil and gas sector if we don't address the climate crisis. And who should have that conversation if that is a solution? Is it not incumbent on us, the financial sector, to talk about the insiders, but also the public? Let's face it, the public doesn't care. Maybe it's on us to make them care.
Just to me, first and
Kevin
foremost,
and maybe Paul, Simon as well, because you're the darkest, or not the darkest, but more like, I would say you have the gloomy point of view, and I'm with you, but
Gloomy,
I think,
yeah.
you can't lay down
You're right.
house.
Simon and I are both a bit gloomy, but you're asking, I think, the right questions. And I think if I understand, the first one is framed around, are there, it's not homogeneous, are there not entry points, contacts, and some diversity? And I think, I think I made the point. Clearly, yes, because we have sessions like this, and we've got people like you and people in other institutions and companies that are trying to operate within the space that they have and do what they can. And that's great. And, political actors, all of us who are wanting to champion more positive, more ambitious movement should pursue, cultivate relationships and figure out, Crystal's point is about, applying pressure. But I would, still come back to the macro point that I'm making, which is, I actually think there's something a bit dangerous about accepting that the terrain of essentially political struggle over how to save the future is in corporate boardrooms only. I think, we've actually gone through 40 years of, for me, troubling policy change that has actually empowered finance, the financial sector, and the corporate sector at the expense of the public sector and public policy. And I'll just use your question just to make one other point further to what Simon and Sebastian was saying about I'll put it this way, about the S in ESG. And a couple of people have made the point, I think maybe you or somebody made the point about, the unfortunate lack of support or apparent lack of interest or support from the general public on visionary, bold, ambitious climate change policy. And much as my central emphasis today has been the potential obstacles and problems from the financial sector to the agenda that I think we want, I'm also first to acknowledge, and I think we should be really blunt in admitting that, I mean, let's just think for a second, we haven't talked about it much, about the working class in Canada. The 50, 60, 70% of the population that don't really attend conferences, that are just surviving and trying to make a living. And what's our society look like after 40 years of neoliberalism? More unequal, less democratic, the cost of housing is going through the roof, and now we have a climate crisis. And one of the questions, I'll just close with this. I mean, I don't know how many of you followed this, but in France a few years ago, there was some step taken, an environmental measure around gas taxation, and it was in the vein of climate action. And it provoked what was called the Yellow Vest movement. C'est quoi en français? Veste en jaune? Gilets jaunes, yeah, exactly. Which was a very angry, mobilized, populist counter from people who felt that their interest was not being represented or reflected in an increasingly ugly society. We are not going to gain the popular support for the kind of policy agenda that we need. And I think we need that popular support.
Can I just add one to sometimes? We did a recent study on pension funds, on investments pension funds, and the biggest in the US, and other colleagues did that as well. The result is, the lower the investment in fossil fuels over the last 10 years, the higher the financial return. Point. So, if you divest, you make more money. And that's a pretty easy thing, and you don't have to argue with any moral or whatever. It's the duty of the pension fund to create to create money for the beneficiaries. They do it the best way if they are careful about fossil fuel investments. That's pretty easy. You don't need any moral or other arguments for that. But I think that's often something that is not seen. And if you are a beneficiary, ask the pension fund people there, say, why don't you make more money? I see you are invested in fossil fuels in that amount, and there are studies that show if you get rid of them or partly of them, you make more money. Do that. That's fiduciary duty. Pretty straightforward.
Yeah, so I'll debate you a little bit on that. You have to be very cautious when you're looking at fund performance between realized performance and expected performance moving forward. So when you have a shift to green investing, like we've seen, there's a general push toward green investing, valuations of green firms go up. And as valuations of green firms go up and valuations of polluting firms go down, what you see is, in the transition period as they go up, yes, you have a high performance. But as the valuations are up, if you then invest, potentially returns may be lower down the road. And so you have to be cautious between the realized performance that may be high, but also the future performance that may be lower.
We consider that, but that's
okay. There is, going back to Delia's question, I think there's a fundamental point in your question, which is to what extent we should delegate decision making to either the fund managers, or to the public itself. And that's been a fundamental question of governance, right? I mean, when you think about corporate governance, we have boards for a reason, because boards aggregate a lot of information from all kinds of individuals and channel that into an efficient decision-making process. But it's hard, because the more concentrated it might be, at some point the boards may no longer, at some point perhaps, represent the views of individuals, especially when you start having polarization among the groups, right? And so right now it's actually really interesting. If you look in the Netherlands, they're doing experiments where the pension funds are starting to outsource some of the decision-making process to their members on ESG matters. And they're trying to figure out what's the optimal way to do. And you have to be cautious, because if you start delegating too much, not only might you have too many different views, But you may also have another problem, which is, as you said before, people don't care, right? If at the end of the day you're going to have everyone going to vote on tons of policy proposals that they don't know about, they may just not vote. And if they just don't vote, then you don't get, it's overwhelming, so you don't get the engagement. So how do you get the right representation? And how do you get the right trade-off, the sweet spot, where you can get the member views with the more efficient process of a few board members who are deeply involved in the process? And I think the next 5 years we're going to see a lot on that front, because there's some experiments being done at the moment that are quite fascinating and worth following.
One quick comment on the question, and let me start with an apology. I come across as dark or depressed or self-hating or something like that sometimes. It's a professional disability maybe, but it's actually not how I feel. It would be wonderful if our institutional asset managers spoke to, and they're quite political, most of them, spoke to their political friends, colleagues, masters, however, and said, we'd really like you to be doing something a little more active in this space. I think like if there was one thing, and I know it speaks to the thing that I want to have happen, but like they could say, no, why don't you set up the Pan-Canadian Infrastructure Fund, completely publicly funded, we'll buy bonds from it or something like that if you'll give us a very good, like slightly better than market rate, and they're non-fungible, and we can think of all the financial engineering that go around that. And in fact, I think it was your fund that did this to build the highways of Ontario in the 60s, right? And then you go build them, you can absorb the risk, rather than the alternative, which is unfolding right now from the political situation we saw from the financial center, which is Minister Friedland saying, pension funds, why don't you do this stuff for us? We really need it. And by the way, probably what will happen in the negotiations of putting your money to do this, because you could make more money in, I don't know, British water or Brazilian farmland or wherever you might otherwise be going to. If you bring your money to Canada and build the things that we need to green the economy, we'll guarantee a rate of return. We'll absorb all the political risk. We will actually make it a riskless thing for you to do, because that's what we need to do for you to fulfill your fiduciary duty, and even if it is a win-win proposition and so forth. So what's the government doing in that situation anyway? They're essentially doing everything except, and so why not have your pension fund leader say, we'd like to just continue with our business, we're really good at it, we're the Maple Aid, we're the best in the world at what we do, we'd like to actually continue to play in Malaysia or wherever they're doing their deals, but you go start something here, and then we'll come and we'll join and we'll do that. And I think that would be a wonderful way to have a current, immediate, direct impact. That 10 years that we're missing, catch up those 10 years, anyway, et cetera, et cetera. So sorry, wasn't so brief a comment after.
Je voulais juste rajouter quelque chose auquel je pensais, à l'aspect social, le S dans ESG. Bien sûr, je parle de la CDPQ parce que je suis concentrée là-dessus à la journée longue. Mais sinon, dans cette politique d'investissement, les droits humains font partie des critères ESG, là, dans le sens que la CDPQ a cette obligation aussi de s'occuper des droits humains, si on peut dire. Mais quand on les questionne là-dessus, ou si on regarde les investissements qu'ils font, encore cette semaine, je ne sais pas si c'était dans la presse, il y avait une lettre ouverte, je ne sais pas si vous avez lu ça, c'était super pertinent sur le non-respect justement. En fait, la CDPQ investit encore massivement dans les entreprises qui contribuent actuellement à la guerre qu'on connaît. Donc, à savoir comment faire en sorte que l'aspect social, par exemple des droits humains ou le respect des droits des peuples autochtones, par exemple, devienne une priorité finalement, que le S devienne une priorité dans les investissements de la CDPQ. Et je reviens à l'aspect législatif, mais on dirait que les critères ESG ne sont pas suffisants pour assurer que le S fasse partie finalement des critères de préinvestissement du fonds de pension, de la CDPQ à ce moment-ci. Et je reviens à cette importance peut-être de rentrer le S au niveau des lois et des législations finalement, pour que finalement les fonds de pension ou les institutions financières n'ont plus le choix de s'en occuper, parce qu'il semble que sans qu'elles soient vraiment intégrées au niveau de la loi ou législatif, ça devient un peu tributaire du fonds de pension, à savoir quelle priorité il donne au G, au E, au S. Donc, on remarque ça, puis même encore, c'est ça, parce que je vous invite à lire cette lettre ouverte dans la presse sur les droits humains qui était très, très bien écrite, pour vous savoir un petit peu plus au niveau de ce dossier-là.
it would incorporate employment benefits and so on. I ask you as somebody who considers themselves a fairly progressive legal academic, where is this world where shareholder value is being interpreted in that way? I would like to go there. But in addition to that, is it a nostalgic world? I know that shareholder value didn't always have this completely narrow interpretation and incredible ideological hole that it has right now. And I wanted to combine the question also with something that Kevin had said about fiduciary duty, because I found that fascinating that there could be a duty to the pensioners as investors, but there's no duty to the pensioners as humans. So the fact that their shelter is becoming more and more expensive, that their health care is becoming more and more expensive, that they're being displaced, that they're breathing unhealthy air and drinking unhealthy water, can that never be incorporated as a matter of fiduciary duty to the people who you are seeking to protect?
So it's interesting. If you look at I am by no means a legal expert, but you look at the concept of fiduciary duty around the world, and it varies. And in particular cases, I'm going back to the Netherlands, you see particular funds having in their mandates good future pensions in a better world, right? And that in a better world exactly addresses what you are having in mind, which is that, look, I may generate high pensions, but if the world is not worth living in or everything is worse or more costly, well, that's not necessarily the pensions that you were hoping for. And so it's a very interesting thing, but just published online a recent study looking at some of the large Canadian funds in private markets and the value creation that they generate. And what's interesting is these funds, and these are just a few examples, so not to extrapolate over the entire portfolio, but what's really interesting is you can see real long-term project in play. A good example is the REM, the one rebuilt by CDPQ in a partnership, a public-private partnership with the government. This is a long-term project where the pension fund comes in, spends years putting capital into a metro system with social value, partnering with the government, in a project that will last for centuries, right? Which in many decades, which in many ways fits with the dual mandate of the funds to provide high returns, low risk for the pensioners, but also contribute to the economy of Quebec. So these projects exist, they're there, and if you give the funds that ability to think long-term and the freedom to act, because in many cases, regulation is really important, but it can also sometimes constrain funds to be very short-term. If you provide that ability, we do see actually a right number of examples where you can see these long-term, profitable, value-added projects for all pensioners and society as a whole to come out.
In the province of Alberta, the provincial government under Jason Kenney decided to privatize the remaining 2/3 of the community lab service. That's a public, so 2/3 of the community labs were public sector, doing blood testing and various kinds of lab testing in the health system. Kenney government decided to privatize that. It's something that had been a political football. And the company that was operating the other 1/3 of the system bid in an auction and won and took over the rest of this. So that company happens to be called Dynalife. This is on the public record. They won the contract and they were taking it over. It was a unionized group, and the employees of the public sector labs belonged to 2 different unions, and they had successor rights. And the company, when they took it over, they said to the unions, that's fine, we're going to recognize you, we'll recognize your collective agreement. Oh, but there's one line in your collective agreement we'd like to change. It's the line that says that you will continue to be provided with a public sector defined benefit pension plan. We'd like to replace that with a crummy RSP at about half the value and no security. That's the one change we'd like to make. What do you think of that? The unions fought this, and it became a whole contestation. The point is that the company involved, Dynalife, is 58% owned by OMERS, the defined benefit pension plan of workers in Ontario. So through their pension plan, in this frankly predatory way, they were looking to profit from not only the privatization of community lab services, but the removal of the workers' pension plan. they were converting that into profit, which ends up flowing to Ontario as rate of return. And this is all, rationalized as well. We're meeting our fiduciary obligations to the pension plan members in Ontario. That's just a little illustration of a much larger dynamic that I think is, as I'm saying, part of the problem we've got to contend with.
Thank you. I'm cheating a little bit because I have two questions, one specifically directed at Christelle. Donc je me demandais, vous avez mentionné les droits autochtones, c'est la première fois dans cette conférence qu'on en parle, et je m'intéresse beaucoup à savoir comment la CDPQ peut s'impliquer en fait pour avoir une transition juste et équitable qui reconnaît et qui s'attarde aux droits autochtones, et quelle forme est-ce que ça prendrait en fait une implication, une attention aux droits autochtones et une participation des voix autochtones lorsqu'on parle de transition écologique, lorsqu'on parle de Sustainable Finance. Et ma question plus large adressée au panel en général. There's actually 2 students and myself in this room who, as part of taking Professor Zumbatson's class on business associations, have made a presentation on the topic of greenwashing and the different actors, which actors should be responsible, looking at board of directors, investors, international actors, governments, and our conclusion was very similar to what this panel and the previous one was saying, was that there needs to be a greater coordination of efforts led by governments, led by legislation and regulation. And our question that we were asking ourselves as part of our project was what shape should this government action laws take in the form of laws and regulations? What laws and regulations would you have in mind? Should governments go beyond disclosure regulations, so all the frameworks that we see, TCFD, ISSB, also European disclosure frameworks? Should regulators impose positive obligations on corporations to take actions that protect the environment? So this is my larger questions to the panel as a whole.
Yeah.
Je vais commencer par les plus petites questions. Mais je suis heureuse, en fait, j'étais pas là ce matin, normalement je ne peux pas pu être là, mais je suis heureuse de savoir que c'est la première fois qu'on en parle aujourd'hui, de respect des droits des peuples autochtones. Donc si j'ai pu amener ça au moins sur la table, tant mieux. C'est un enjeu qui nous tient vraiment à cœur, puis en effet, c'est pas simple comme enjeu non plus. Il y a aussi ce respect aussi des communautés autochtones. Donc nous, comme coalition, on ne peut pas non plus arriver avec des demandes directes à la CDPQ. On doit vraiment il faut que ça vienne des communautés elles-mêmes autochtones pour que ça arrive vers la CDPQ. Donc il y a toute ce partnership qu'on cherche à créer aussi. Donc j'exprime cette délicatesse-là de travailler sur l'enjeu du respect des droits des peuples autochtones face à la CDPQ. Sinon, on a eu quelques conversations avec eux. On sait que présentement, ils sont en train de regarder ça de plus près. Mais nous, on a une revendication qui est très précise. C'est qu'au niveau qu'on veut qu'ils intègrent dans leurs critères de pré-investissement, en fait, les principes de la Déclaration des Nations Unies sur le droit des peuples autochtones. Donc, vraiment que ça soit une nouvelle lunette qu'ils mettent en critères de pré-investissement, à savoir est-ce que cette entreprise-là respecte ou non, donc avec les critères de déclaration, et à ce moment-là, bien, ils prennent une décision en conséquence. Ils ont été beaucoup dans l'eau chaude avec leur investissement avec TC Énergie, dans le pipeline Coastal Link, entre autres, avec les communautés Wet'suwet'en, c'est majeur. Donc nous, on soulève cette incohérence-là de la part de la CDPQ parfois. Ils investissent massivement aussi dans la banque RBC, qui ont aussi des problèmes avec les peuples autochtones actuellement. Donc voilà, c'est de cette façon-là que nous, on travaille au niveau de nos revendications. C'est vraiment travailler au niveau de l'évaluation, au niveau du pré-investissement.
I can try and address the regulation problem. I think that the main problem is not what type of regulation, what exactly we should do. I think what is missing is is a real strategy where we want to go to. If you see, let's say, the federal government or the provincial government, there's no clear statement where we want to go, even with regard to climate change. And the question is, what can you achieve, with all this regulation? We see that in all the COPs, Paris, okay, that's what we want. So the governments go there and say, that's our goal, we want to do net zero to 2050, 2030. How much can they really control that? They can promise everything, but they can't control big companies, and maybe one country can, and then
They could.
then they go to the other one, and they don't. It's a problem. It looks easy, just introduce regulations and everybody follows. But I think the first thing is, okay, we need to we have a strategy what we really want. So how do we want to transition to a low carbon economy, and then we can think about what are best ways. And carbon pricing was mentioned. There might be regulation, maybe others, but I think what is really missing is a stringent strategy. What do we really want? And then I think it seems to, maybe it's too easy then. But then I think we can start thinking about, okay, what are the measures to implement to get there?
What I didn't talk about was the other half of the work that I do, which is working with environmental groups, Ecojustice, Greenpeace, other ones like that. And we have legal litigation strategies related to forcing different stakeholders in the system to change, adopt behaviors, and so on and so forth. I'll just briefly mention what it is, and then we can talk after if it piques your interest. Litigation against governments to set stricter policy targets. And there's a famous case in the Netherlands. You keep going back to the Netherlands. I think we should all go to the Netherlands. The Urgenda case, and of course the Shell case about scope of emission liability and so forth. So that's one set. There's some of it going on. There was a case here recently in Quebec. I'm doing that. Cases against carbon majors to try and force them to pay. And the most recent case that's been filed there is one in California. And look at that case for what the prayer for relief says, as we call it, what they want done as a result. It includes a massive fund to distribute to affected communities and organizations to help them remediate the effects of past climate change. Of course, the forest fires the past couple of years, floods are coming, there's going to be a lot more of these things going on. In fact, Canadian municipalities, I wish we talked about this morning, Canadian municipalities should be doing this, actually, and there's lots of legal opinions out there saying how they can do it, how it can be structured, how it can be set up. And the model for that strategy, like the theory of change, is tobacco. The litigation eventually either forced them bankrupt, but certainly forced compensation, and some people are still smoking, so the behavior didn't change in the way that we hoped, but there's that one. The third and final branch is litigation against institutional investors, or the financiers of carbon. So that's not all institutional investors, but and there's not many cases. In fact, there's very few, which lets you know how hard it is to hold people to account legally, through the courts for these behaviors. Fiduciary duty is a wonderful thing to try and tame behaviors, but there's absolutely no way a judge is going to second guess Kevin's decision whether to invest in A or B Corp kind of thing. Like, just never going to happen. I hope this isn't broadcast because I may have to take the opposite position in court one day. And no, that's very interesting. So looking at that, like, how do private actors try and hold their financial institutions of one form or another, members of pension funds, shareholders in banks, and so on and so forth? We've heard a little bit about it. How do they try and force the behavior change and the policy change that they want? We can talk more about it on that. I'm sorry.
Well, if we're running out of time, I see several questions.
Oh dear.
I have a question, and I recognize that you are very close to 1645, which is over our thoughts. So my question is relatively general. The topic of this panel, I'm just reading it from the program, says sustainable finance, a zero-sum game, or an opportunity to transform the economy for future generations. A question mark. Two observations. In light of what Kevin actually said, Kevin read the statement of BlackRock president. And also in light of a couple of days back that Secretary General Antonio Guterres of the United States stated that we have already passed 1.2 to 2 degrees of the Paris Convention, and he further commented that we are on the path of 3 to 5% before 2030. So even if we accept all of the comments that by 2035 we would be net zero, we are 3 degrees above already. So if we get to 2050 net zero, we have collectively lost, significantly lost. Do you have any strategy or comment? Or, if I may, take the liberty of inviting everyone else to comment. What should we do? What should be the strategy? Where should we start? Thank you very much.
Very big question. I do have just one quick response, kind of further to some of my comments. One of the influential books that I've read that I think really takes the crisis seriously in the way that you're talking about was published a couple of years ago by Seth Klein. Is it A Good War? I'm forgetting the title of it. And it recognizes the gravity that you're talking about, the gravity of this crisis. Like, we are in deep, deep trouble. The pace on which we're moving is not fast enough. The argument that he makes, I find very persuasive. Picks up on Simon's point about the New Deal, about the transformation of the American economy in the 1930s and 40s, the time of the Depression and the war. There was a deep social crisis in the 30s and 40s that led to a massive re-engineering of public policy, the creation, I believe, if I remember, 30-some crown corporations were created in Canada to provide specific goods and services and inputs into the new economy that they knew was needed at that time, that the private market was not capable of delivering. Massive intervention of public policy, and it got through not only the social crisis of the Depression, but the other crisis of the war. This is in some ways the inspiration behind the concepts of the Green New Deal, an equivalent dramatic package of policy change that Seth Klein and others are arguing for, and that, in my view, sustainable finance ideas and ESG just falls massively short. We would need a very dramatic sort of a revolution in public policy to really achieve what's needed. I'm persuaded by that. Does that mean we should ignore all of this and give up? Well, no, we're going to find ourselves with access points. We should do what we can. But for me, centrally, we need a dramatically more bold and ambitious public policy to lead that change.
So I agree, and I have no solution to give. But when I look at the path, if we want to go net zero, by 2050 we need to decrease carbon emissions by 8% a year. Even COVID year, when we were all at home, even there we did not make it to the required 8% that we were supposed to. And now we're back in our revenge consumption mode. It's massive.
But maybe on a positive note, often it's less expensive than we think. You know, I think it's 2.6 billion is the home efficiency thing. 700,000 heat pumps. 2.6 billion is nothing for government spending. So let's do 200 billion, and then we get anywhere. So I think, you know, in what US has been referenced quite often, you know, it's often cheaper than we think if we just want to do it and just put in the money. You know, I think maybe we overcomplicate things sometimes. You know, all the budgets that is used for these things, provincial, Ontario, you know, provincial and federal and municipal, it's relatively small money, everything. So if we increase, we might get where we want to.
Could I just, how many more questions do we actually have? No, it's fine. They're all very welcome. Okay, we have take two. we bundle them, and then we do a little experiment for the last 7 or 8 minutes. Go ahead, please.
Just to follow up with this question, so I think there are two major points we need to change. The first is the technology, and the second is the behavior of people. And I think the most fundamental drive for this is the pricing model. So we need to price in all the externalities of the economics. So if everyone just price in their own externalities, there might be a equilibrium status of the market. So the market will adjust itself. So yeah, but I don't know like how applicable this is. So maybe like you can explain more on this.
Would you allow me to add the second question to that?
I have a question about pension reform, particularly for Kevin, maybe Christelle as well. Has the change from defined benefits to defined contributions been kind of like a lever in what we've seen over the past 50 years of increased reliance maybe by workers on the securities market and whatnot? And maybe is that changing back maybe a lever to maybe take a less direct approach, well, to have less of a reliance on the laissez-faire approach that we've been doing thus far?
Oh, sorry. Yeah. Who's going to take this?
I think there's the equilibrium.
I'll take the first. When you look at the current carbon pricing system we have here in Canada, it's a patchwork. It's a patchwork. Every province has its own, you have a number of exemptions. What's hard is the government set the price, but in many cases, there's pressure by different groups to have an exemption. We just saw one 2 weeks ago, right, where the heating oil now has an exemption. It's incredibly hard to design well because, again, you need coordination, not just within the country, but also abroad. Because another issue that you face is if you have too tight or too good of a carbon pricing market, where you price carbon higher than other countries, maybe the true cost of carbon, firms might leave, right? And so you have multiple pressures here of, again, coordination among provinces, stakeholders who seek exemptions, but actually these are the ones might be, those who are polluting the most may actually find the hardest to get exemptions, and the pressure from countries. And so in practice, we can discuss for hours and hours, but it's, we're not quite there yet.
Defined benefit. The question about pension plan design and the transition from defined benefit plans increasingly, like over a number of years, as you rightly say, we in the labour movement have been losing secure defined benefit pension provision, not as rapidly as it has happened in the UK, Australia, US, but it's been proceeding and it continues. And I would just say in response, yes, I think the way you put the question, it's interesting to look back on it because, you know, I kind of lived through that. I've been working on pensions since the mid-90s. And it's just interesting to think for a moment about that particular time. Financial markets were roaring. People were starting to pour money into RSPs. I mean, I'm talking about in Canada, 401ks in the United States. It became a cultural fascination. People became convinced that through their own individual mutual fund investing or their stock picking prowess, they were going to beat the market and become millionaires. I don't know if people remember the book, The Wealthy Barber. This was a multi-million-dollar best-selling book from the 90s when this sort of, you know, and people got captured by the idea. Everybody was going to get rich by the time they retired, and it was partly by investing in the stock market. Well, this hasn't worked out, to put it bluntly. And, you know, my quick take and quick answer is not only will we continue to try to turn back the transition at the employer level from defined contribution, you know, insecure RSP style plans to defined benefit plans. Frankly, and I'm probably in the minority of the labor movement, I became convinced some years ago that we were not going to turn that around. And in fact, one of the big problems is not only the insecurity of defined contribution plans, but the fact that 60% of workers in Canada have no pension plan at work. And in fact, workers that do, whether it's a defined benefit plan or a defined contribution plan, workers that do, they're kind of resented by everyone else, especially in public sector workers, teachers and so forth. Like, why do they have a pension? I don't have anything. You know, we fight that. But on one hand, it's understandable that people would feel that resentment. But the way to fix that is not take away the pensions from those that have it. It's to bring everybody up to retirement security. And for me, the only way to do that is through expansion of the public pension system. And what I will add to that for today is I think an expansion of the public pension system, and I'm thinking about old age security and the Canada pension plan or Quebec pension plans. I think that can be done, I would argue it should be done, on a non-financialized basis. In other words, the money doesn't have to cycle through the stock market, the bond market, the private equity and infrastructure market. It could be done in the way it was done in the 60s and 70s in a different era, where if there is a reserve, it can be channeled as the original CPP reserve. It wasn't in the stock market. What happened to the original CPP reserve? It was loaned to provincial governments to do what? Build hospitals, highways, universities, schools. That's what the CPP Reserve Fund used to do. It doesn't do that anymore. Now, it's going to Brazil and privatizing the water system in Rio de Janeiro. And all kinds of other things that, you know, if we had another hour, I could list. So for me, that's an important part of the social problem that we also need to address.
Christine, we're speaking in Canada. Canada might be the only country in the world that is expanding its DB system. If you look around the world, DBs have closed, turned into DCs. Canada, if anything, has gone the other way. We're looking at CPP2, QPP2, so we've increased these systems, and these are meant to be fully funded, defined benefit plans for the entire country at the national level. The public plans are actually quite well funded when you look across the board. It might be one of the only country with all the equal aids have funding ratios above 100% and have maintained it. Other countries have stopped it because they can't run the plans, it's too much risk on the employer, but if anything in Canada, it's been going the other way around. And so we may see potentially a reversal in the years ahead. We have a labor shortage right now, and as we see a labor shortage, we see powers back going in a ways to the workers, and we see some firms starting to rethink their approach. So whenever there was a switch from DB to DC, there was a shifting of the risk from the employer to the employees. But there was also a hidden shift, which is that the level of contribution by the employer went down. We talked about, I don't know, anywhere from 10, 20% down to 6, 4, 5. It was much less generous. But now that we're having more of a labor shortage, we see it coming back. Look at it in the news, IBM just announced that they would go back to a DB system. So it's going to be interesting to see what follows now in the new type of economy.
Yeah, of course. Thank you very much. So, when I ask you now to thank our panel, then please do so, but do not just let them run away, because we need 2 or 3 minutes afterwards or something else. So thank you very much for this panel and for all right, the program said that we would have a few minutes of global reflections. So, and it didn't name who should do those. And so, of course, my daughter should do this, but she missed the last few minutes of the discussion, so she can't do it. But we should really acknowledge, and I hope all of you who came might be able to appreciate how much work has been done by the students for this event. They were not only the students that have helped us with the logistics, but there were also a number of students now filming and photographing, and also taking assiduous notes on everything, and they're going to write up summaries on this event. So what I would like to do is, if that's not, you can just say pass like you do in class, but if maybe 2 or 3 of you could just say, take a minute or 2 and say what you, don't try to say what you took away, because you took away that you're very exhausted now, but what was maybe 1 or 2 aha moments, or what did you learn that you didn't know before? What struck you? What inspires you? Made you sort of happy, but also with Simon's theme, what utterly depresses you still? If I could have, I don't know, let's not be too ambitious, but 1 or 2 volunteers, that would be really great, so that the global reflection, the last word, I'm not done by the panelists or me, but by people from the students.
I think it was nice to see that there are such progressive minds in the financial sector, but I think there were a few comments that this might not be unfortunately representative of the whole industry. But it was very great coming into this conference with the knowledge of the course, so knowledge of taking business associations with Professor Zubanson and working with my peers on greenwashing and having some of this vocabulary on the different frameworks and coming here enlightened by this research to hear more about current projects. I think what I take away is a lot of substantial concrete examples. So I think younger generations are usually very impatient to see actual changes, so classroom theory put into action. And so it was nice to hear about some of the different initiatives in each of your sectors. So some of the strategic litigation that's going on, and some of the results from your research, and how it's being implemented today. So I think this is what I'm taking away from the panel, and thank you, Professor Zumanson, for organizing this and this opportunity.
My question was actually very similar to Professor Gupta's question about fiduciary duty, because in class we've always talked about it, especially in the evolution of the jurisprudence as well, that fiduciary duty is expanding to include concern for the environment, things like that. But I mean, this panel almost seems a little more resigned to the fact that it's not, and it's more static than we think it is in the academic environment. So for me, I'm just kind of trying to square what I've learned about fiduciary duty and its evolution in my books versus maybe how actual financial entities now deal with that as well.
The concept of fiduciary duty is absolutely critical. And look at what happened in the US with the ERISA laws. It keeps going back and forth. The same statement gets interpreted in multiple ways, and it really speaks to the mandate of the funds. And it's not extremely clear when you look at it, right? I mean, it could be interpreted in different ways, and you see that regulation going back and forth. It's actually quite fascinating.
If you look at the way the concept's deployed around the world, you find dramatically different behaviors, all saying they're cleaving to the same norm. And so that lets you know that it's a very open textured norm, is what some of the sociologists say about it, you know? And can be political or politicized, or it could just be sort of a descriptor of herd behavior or something like that. It can be used as a weapon sometimes. It used to be used against labor movement to say fiduciary duty, sorry, we can't invest in worker-oriented stuff, And then at other times it's a facilitator. It's your fiduciary duty to do this and not that, and so forth. So it's not the gloomy concept, but it's actually also, it's not the most important piece of the puzzle, I think, or I would submit to you. We rely on it a lot. People talk about what their fiduciary duty is. They're usually talking about something else. They're usually talking about, I can see you mouthing somewhere, but no, so what I suggest that so who gets to decide when that duty is discharged or not? What community of interest? What group of actors? In the pension fund world, it's the lawyers a little bit, but they don't really have much to say about it. It's the investment consultants. And if they all agree that this is something that you can probably do and it's safe enough or it's good enough or something like that, then you can do it. And if they decide that it's not, and then look at how they've changed their mindset over time. They think very differently today than they did 15 or 20 years ago. And they go in waves of economic theory. It's so interesting. Portfolio theory was a big one. Financial economics was another big one. And now I'm throwing jargon at you. But that's what fiduciary duty is, not some legal concept. It's just some words that were convenient for 18 judges in the 1800s to articulate for family trusts. But in the modern management of a big diversified portfolio, it's whatever the economist says it is really the answer. And that's meant to be a happy thought. I didn't make it sound like one.
It's
how sustainability is actually a big paradox in itself, because sustainability is about investing in the future so that future's people's well-being exists. But at the same time, it's a paradox in the sense that we have to keep thinking about today's people's investment. The well-being of today's people is more actually about consuming, spending. So even when we're talking about investing in the future and how to make it sustainable, I think one of the bigger reflections we still have to have, and that relates to the S, I believe, of ESG, is how it's important to make a great balance out of it. Maybe I've got it wrong, it's just my big takeaway is dealing with how sustainability is a paradox in itself.
In Professor Zumbanson's class, I had the opportunity to present about a topic with some other students here today, workers on the board. I personally got some viewpoints on the S and the G aspects, a little more than the E, and I found today very important for the E. This panel showed the vital role of cross-industry knowledge in breaking away from the traditional business as usual framework, like Professor Zumbanson said earlier today. Throughout the day, there were highlights of the current underperformance in implementing meaningful measures to combat global warming, and some confusion arising from conflicting ESG factors and standards. And I take away and emphasize the need for a more centralized and coherent approach to it all, and to policy making, and basically to standard setting in the industry.
Je voulais juste répondre un peu à qu'est-ce que tu disais que c'était un paradoxe, le développement durable. C'est un terme qui est quand même critiqué. En fait, on l'utilise beaucoup dans le milieu financier, le développement durable, mais quand on tombe dans les ONG environnementales surtout, et même sociales, on critique le terme développement durable puisqu'il a été beaucoup galvaudé aussi comme terme. Il a été utilisé beaucoup par les entreprises, parfois quand ce n'était pas réellement du développement durable. Donc je pense qu'il faut rester critique face à ce terme-là et pas trop l'endosser de façon à toutes les sauces. Donc je pense que c'est un conseil comme étudiante que je vous dirais, demeurer critique avec ce terme-là, et quand vous l'utilisez, soyez sûr d'avoir l'argument derrière pour bien le présenter aux gens à qui vous vous adressez. Là.
Great, thank you so much everyone. Now that we have done the hard work, we somehow didn't manage to get an alcohol license. We were told several times it's way too late, you cannot start organizing the event just a few weeks ago. Anyway, so you have to get high on Coca-Cola or just not get high. And you're very much welcome now to talk to each other and reflect a little. And then I also would like to say that the student helpers and rapporteurs and those of the panelists who are not flying, nobody's supposed to fly anymore now, who will walk home tonight, the ones that stay in town, we should still see if we can go and get some dinner. That's still an option. So, and the student helpers are very much invited. Okay, that concludes the hard work we did all today. Thank you so much, everyone. That was very inspiring. Thank you.